में जारी।
Welcome back. Let's get chatting to the corporate on our show. We have Mr. Prasad Patwardhan, who's the Chief Financial Officer at ITD Cementation, joining in to discuss the business outlook for the company going ahead. And this, remember, is ahead of the results, so it will be an important one to watch out for in terms of how the performance was in the previous quarter and, more importantly, the qualitative commentary for the next couple of quarters as well. Thanks a lot, Mr. Patwardhan, for joining in. The last time you joined us, you said that you are eyeing orders of almost 10,000 crores this year. So far in the first 9 months, what's the order inflow been like? And do you hold on to that 10,000 crore plus inflow guidance for this year?
Good morning and thank you for having me on your show. Yeah, I think we are good to go, good to reach the number of around 10,000 crores. We are already secured orders worth 8,000 plus crores in the 9-month period. And there's a healthy order pipeline and bids that have been submitted or will be submitted going forward. So I think 9 to 10,000 should definitely be on the cards for this financial year.
Hi, Mr. Patwardhan. Good morning. Nigel on this side. Good to speak to you after a while. So your total order book will be in that vicinity of around 23,000 crores?
That's correct. That's correct.
See, this is looking good, but the only thing the street is very cautious about is what about your legacy orders? So I want to just take a few minutes to focus on that. As a percentage of this order book, how much is the legacy orders? Point number one. On those legacy orders, I understand that margins will be absolute zilch, or maybe you may not make any margins out there. And point number three is, by when will you get done with these legacy orders? Because the street wants to look ahead. The new projects will be far more lucrative. Go ahead, sir.
So there are 3 points that you picked up. The legacy orders would be in the range of 5 to 10% of our order book, not more than that. And most of those orders, it's not that those orders will not give us any margins, but the margins that we'll make on those orders would be significantly lower than what we make on the newer orders that we have secured in the last couple of years.
Okay.
And these orders, we expect them to really get out of our system in the next 2 quarters, I would say, 2 to 3 quarters max.
All right. And could you give us a sense of the margin differential between your new orders and the legacy orders? You said that, of course, the newer ones are more lucrative. If you could quantify that?
Well, difficult to quantify because these orders are in different stages of implementation and they are in different segments also. But some of the orders, where like Bangalore Metro, for example, where we have been losing money. And there are other orders where, the commodity prices, what they were when we bid for the projects, today the commodity prices are still higher than the bid prices. So we'll see, single digit or low single digit margins on some of those orders, or nil margins on maybe 1 or 2 orders as well.
Okay.
But that should turn off in the next 2 or 3 quarters.
I think this clarification is important. The last time I chatted with you all as well, you all had briefly, mentioned about this, but the legacy orders getting out of the system by the middle of this fiscal is going to be extremely crucial, because then the street focuses on new business. Let's focus on FY25. I don't want to ask you about FY23 because, you could be in a bit of a silent period. But for FY24, the earlier guidance was, you're going at around 1,500 crores per quarter. So in all probability for FY24, you hit around 6,000 crores of revenue with margins in that vicinity of around 10% odd. Is that gettable?
Well, we have been, our MD and I, both of us, we have been saying that we look for about a 25% growth in our top line for the next couple of years or 3 years.
Yeah.
And we'll go with that guidance right now. Margins, as we have stated, we'll see an improvement, a gradual improvement in our margins. And our endeavor is to reach, somewhere in the next year, 10% or cross that number in the next financial year. Whether we are able to do it for the whole year or not will depend on the legacy orders and how fast we are able to get out of them. But that is our aspiration and that is what we are working towards.
It's fair to assume that once the legacy orders are out of the system, by the virtue of your new orders, you will immediately hit 10% in terms of margins, right?
Well, that is the expectation. That's right.
All right. And, as far as your order book itself is concerned, of course, majority of it has been urban infra, highway, maritime, etc. Are there any other sectors which are more margin lucrative, which have a higher potential? I mean, are there any potential order wins coming in there in the near future?
Well, there are projects that we have bid for in these 2-3 segments as well. So if we were to get those orders, they would be margin accretive. But in our current order book, there are some tunneling orders, or there's one irrigation order which is giving us, which will give us better margins going forward. So largely, we are in these 3 or 4 segments which tend to give us better margins. It's only the legacy orders and the buildings or elevated metros where the margins have been muted, or we have lost money in the past.
Okay, all right, Mr. Patwardhan, what about the debt number? Given that you want to grow at 25-30% for the next few years, just a rough calculation, you do 6,000 crores, you move to around 7,500, then 9,000 crores. That's by 2025. You'll require money, right, to execute some of these orders. Peak debt levels? What, around 800-900 crores? That's the peak debt level?
Yeah, I think we should look at that number. And this year itself, we'll see some increase in debt. Largely, we'll see an increase in the term debt number because there will be a lot of capex that we are incurring mostly in this year, and maybe some of it may spill off into the next year as well. And all that capex is going to be funded largely through debt and through internal accruals. So we'll see an increase in debt this year in FY23. And to a lesser extent in FY24, but I guess that number of 800-900 crores would be reasonable, going forward for the next couple of years or so.
Mr. Patwardhan, usually, when there are a lot of elections, etc., and the next year has a lot of state elections, major state elections too. How do ordering, trends pan out in election years? Do we see muted activity ahead of elections and then perhaps post-elections an increase in orders? Just wanted to understand, because this year you will get 8,000-9,000 crores worth order inflows. Next year, what is the plan because of so many elections, etc.?
Well, state elections don't really impact us because we don't have too many state orders in our kitty, and we are not really focusing on state projects as such. The larger projects that we are looking at are funded by central government or PSUs. So, that the state government elections won't really impact us to that extent. Yes, the Lok Sabha elections in FY24 and, the code of conduct, whenever it kicks in before that. So we'll see lesser ordering probably, in the run-up to the Lok Sabha elections. But we are sitting on a healthy order book today, so that won't really impact our operating performance in any significant way.
So you won't hazard a guess on next year's order inflow, will you? Or is it too early?
We should look at some orders probably in the first 6 months of the next financial year, but then it will depend on the elections and how things pan out, keeping that in mind.
Okay, all right, Mr. Patwardhan, it's been good chatting with you. Well, the street likes what you have said. You have reiterated your guidance and the vision as well going ahead. We look forward to having a chat with you post your earnings numbers. For the time being, the stock has moved to the high point of the day. Let's pull up the intraday chart. Stock has spiked up a little bit. Time for a short break, but as we do that, here's some important information for our viewers. Don't miss out on the 19 must-have stocks for 2023. Subscribe to Money Control Pro to get the full list.